Hey, welcome back everyone. It is time for another red hot cover call video. Well, hey, look, we're back at it. Wasn't it just a couple videos ago I talked about doing the in the money covered call using TNA? Well, that was in my account. I just did an in the money covered call using my son's account using TNA. We went ahead and used the in the money covered call largely because we just closed out a trade, so he has settled money. You know, this is one thing people always ask me, why didn't you do a cash secure put? So before we move forward, you could have done this trade picking the same strike price, but using a cash secure put. The reason we do an in the money covered call here is because his brokerage will allow him to buy shares and write this in the money covered call, for which the premium profit that I'm going to show you is the same, if not a penny off, from what a cash secure put would have paid. So it's really the inverse of each other. There is risk that I own the shares, but I could also collect a dividend because I own the shares. So there is positives and negatives of owning the shares, but really it's the same. If the stock were to fall to $22.50, we are going to either be assigned the shares with the cash secure put, or I keep these shares and we have to do another trade. Now, let's go ahead and get to this. If you like anything you hear today, we talk about generating cash flow using the cover call strategy, the cash secure put strategy. We take those profits and we buy a dividend paying stock. We go from the trade mindset to the wealth mindset by buying passive investments that pay us weekly and monthly. Hey, look, that's what we do here at the membership. I just did a video. I'm going to show you the video here at the end where we talk about using margin to buy dividend-paying stocks. I've been keeping everybody up to date on that. I have about 6 or 7 updates. You want to be a part of my membership if you want to learn how to generate cash flow, selling premium like I'm going to show you here, and then taking that cash flow and then buying a dividend-paying stock. I call it my dividend tree. We're looking to have a dividend tree grove, buying as many of them as we can with these profits. So let's go ahead and get to this. If you like anything you hear today, I want you to subscribe to the channel. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what I'm doing is this. I'm using the in the money covered call with TNA. TNA is a 3x leverage ETF to the Russell 2000. Right now, the entire market is trying to find a home. It's trying to move higher. Well, TNA is the Russell 2000. It's just 3x leverage. We use it because we're able to generate larger premiums. It's the Russell 2000. So if I think the Russell 2000 is a good investment, then I'm going to use TNA to actually generate near-term cover call premiums that might be larger than, let's say, using the IWM, which is the ETF that tracks the Russell 2000. So TNA is one that we always use because it pays larger premiums than most individual stocks. If you ran the numbers on some of the favored stocks out there like MicroStrategies and NVIDIA, you would find that TNA actually generates more cash-on-cash percentage gain for money invested for the same time frame and at the money strike. So for me, I'm going to use an index so we're diversified. I'm not going to buy a single stock and have that sucker tank. No more. Reduce single stock risk, get involved with the indexes, and add a little juice and use a leveraged ETF. Now, I know some will say, well, they fall further. They're so volatile that they're risky. I always try to teach my members and anyone that'll listen, we're using the index. Is the Russell 2000 more risky than, let's say, MicroStrategies or NVIDIA? Of course not. It's 2,000 stocks and it's diversified. And I love that. So it's going to go up and it's going to go down, but chances are it's going to go up again. That's what the markets do. But will your stock go up again? So you're using all these stocks out there that are risky, high volatility. We don't know if they ever recover, but we know the indexes will. Absolutely love using indexes. Now, here it is, TNA, trading in and around $24.98. What do? We go to the CPT in the money calculator. And you can see it right there. We're going to go ahead and plug in the numbers because this is going to show you your profitability. Now, a lot of people don't understand the in the money covered call. How is it you're going to give your shares away lower and make money? Well, it's because of that premium they're going to pay us. See, we're going to hold these shares, so I better get paid for time holding these shares. So it's trading for $24.98. We go ahead and we're going to buy 300 shares, and that's what we do. Now we do not hesitate, because these numbers are based on me buying the shares at $24.98. We then dial up that in the money covered call. Now, why did I pick the 22 strike? Because that's where I'm going to sell them at. You can see on the chart, look at that chart. That's the Keltner channel. And you can see that right now it's trading at the mid. Now, that's going to be the top of its sandbox. We always talk about where a stock's trading. Well, that is the sandbox. Notice that over the past 4 weeks, it has traded as low as 18, and right now it's trading for in and around 25. So what's its sandbox? Well, its sandbox is in and around that number right now. Look, I don't have a crystal ball, and neither do you. So we got to make these decisions now based on the best information we have today. So the 2250 strike is a great strike for me, because notice on the chart, if TNA were to pull back, this thing is going to pull back probably to where we have near-term support, and that's in and around 22. Now, here is the reason we picked the 22 strike, because if we are to hold these shares, say for example, notice that we do not start losing money until TNA falls to 22.49. That means I'm going to keep these shares, right? The market maker is going to assign these shares to the call buyer if it's trading at 22.50 and above. So I have downside protection. Right now, $2.48 make up downside protection, and the stock can fall that far, and I don't lose money. Now, it's not a part of my profit either. I only make money on the 93 cents. So understanding the in-the-money covered call is something you have to do. We're going to buy them higher, give them away lower. The premium's going to make up for the difference between where I bought them and where I'm giving them away, and the rest, money on the table, is my profit. And in this case, it's 93 cents times 300. That's $279 for this 18-day trade. Now, that's going to be 3.72% in 18 days. You're saying to yourself, that is incredible returns. I mean, that's a very conservative trade. Like, you're buying them at $24.98, you're giving them away at $22.50. That's conservative to make 3.72% cash on cash. Put the money on the table, buy the shares. Have them taken away, the premium's there. What are you left with? 93 cents, knocking it down, $279. That's going to represent, based on the money invested, buying the 300 shares at $24.98, 3.72%. Selling premium, you can beat the stock market hands down. Okay? You can give yourself some downside protection while taking on the risk of owning these shares. But you got to do it like I mentioned here. You want the in-the-money covered call. I give these things away for free, but members have access to all my trades. See, they already got this trade, and you could have too. Now, I know you're asking yourself, dude, this is too good to be true, or I've never heard of you. Do you even know how to trade? Look, this is TNA. This is what I did for this year and last year. In fact, this is not even all of them. It doesn't fit on the screen. TNA has been my go-to. It's one that I use. I made $57,000 alone using TNA last year. Selling premium, writing cover calls, selling cash secure puts. Hey, look, before I get out of here, look at that trade again. We buy them higher, we're going to give them away lower. It's an 18-day trade. We have $2.48 of downside protection. The stock can fall all the way down to $22.50, and they still take my shares. Now, if the stock falls below that, I'm going to have to keep those shares, but then we're going to write an at the money or at my cost basis. What's my cost basis? Is it $24.98? Of course not. It's $22.50. The guy paid me the $2.48 in intrinsic value or downside protection. I don't count that as profit. We start the very next trade with $22.50 as my cost basis. And we could put on the second trade, and like I show you in these videos all the time, we could even make double for another 18-day trade. Using leveraged ETFs to the indexes gives you diversity, and it gives us higher premiums than, let's say, using the one-for-one ETF. If you were a member, you'd have gotten this trade in the phone app, the email, and I posted it on my real-time trade blog. I'll tell you what, being a member, you get to follow me, see all my trades, and you can see I've lost some recently. I show all my trades, whether I win, lose, or draw. The membership is about you seeing the world through my eyes, taking a peek over a successful active trader. And what I'm going to tell you is this: I got skin in the game. All this money, well, outside of my kids' money, but all this money is what I trade and I live on in retirement. So if I don't want to go back to the 9 to 5, I retired in December 2022 at 55. If I don't want to go back to the 9 to 5, I better be good at this. And I take my profits, I pay the tax man, and then I buy a dividend-paying stock. All my members see everything I do. Taking a peek over my shoulder, follow my trades, and hey, look, in the phone app, members get exclusive video content you don't see here. Check out the last one, using margin to buy dividend-paying stocks. It's a part of my update series. I have created a calculator for which we could have an initial trade setup. Now we have a worst-case buffer tab in the calculator and your margin tracker. I'll tell you what, you'll want to be a part of the membership so you get all those exclusive videos no one sees but the members. Hey, look, be safe, be healthy, most important, be lucky. Until next time, may all your covered calls be profitable.